Welcome back, and joining us for a look at what's played itself out on the market scene today is Imitiaz Suliman from Sentio Capital. Thank you so much for your time, Imitiaz. The JSE close to 86,000 points, so we are seeing the commodities flying over there. The rand also close to 17 rand against the US dollar. Is there a specific reason for all this buoyancy that we're seeing in the markets?
Yeah, Zanati, I think we're playing a bit of catch up because we had our public holiday yesterday. But this is following on from the Fed's rate cut last week of 50 basis points. And then we had quite a bit of positive news out of China yesterday. You know, they've essentially opened up the taps. They've cut the reserve requirement ratio. They've cut the lending rate. They've also implemented a stock stabilization fund to support the equity market. So growth in China has been weakening for some time now, and there's been lots of concerns around China meeting their 5% GDP target for 2024. What came out from the central bank governor was some sort of admittance that, you know, that target is at risk, and therefore them opening up the taps. I think it's still very much policy related. We haven't seen a lot on the fiscal side. And that's where we need to see real stimulus come through, because confidence, and especially consumer confidence in China, has been very weak because the property market has been very weak. And a lot of the wealth for Chinese consumers is tied to the property market.
Well, talking about confidence, of course, it seems that we are now either done with results season or it's really cooled down, where we'll just get maybe one or two going forward. But Vukile coming out with a pre-close trading statement. And of course, there seemed to be a lot of confidence on the stock. They even talk about a very strong H1 performance, both overseas and here in South Africa, with improved trading conditions. They're also talking about their recent expansion into Portugal. Does the runway for this stock look pretty long?
Yeah, I think the whole property sector has rallied quite significantly from its lows in March of this year. And that's been on the back of lower bond yields. You know, property counters are very geared towards the bond yield because they have quite a bit of debt on the balance sheet, and also property values are tied to the bond yields. And then secondly, you've had, no load shedding, which also feeds into the cost base being lower, and overall sentiment has been improving. So Vukile is very much focused towards the retail sector in particular, both here and in Spain, and they will benefit from any uptick that we see from a consumer perspective. We know the two-pot system has been implemented, which would be positive for a consumer perspective. That would be a cash injection to the consumer wallets, and a lot of that spend will filter through down to the tenants that the likes of Vukile has. So I think overall, they're still guiding for distribution growth of around 4 to 6%. That could probably be a bit higher if we see GDP growth extend and also come in higher, and consumer sentiment also quite positive. So it does feed into the types of tenants that Vukile has, but also into the exposure of retail that Vukile is very much exposed to.
Well, Imitiaz, still sticking to the property sector, Vukile had its eye on capital and regional, but decided to give up on it this year. New River REIT, though, has decided to go in there, and it has come to an agreement with capital and regional for Growthpoint's shareholding as well there. Talk to me about this deal.
Yeah, I think it's been a bit of a lost holding in the Growthpoint stable. They're now rationalizing their portfolio. It will help them incrementally to reduce some of the debt on the balance sheet, which would be positive from that perspective. And it would allow Growthpoint to focus, on some of its core assets. They've got quite a big portfolio in South Africa. There's a bit of a mix between industrial, retail, and office, and focusing more on that and trying to harness the value that they have in the core portfolio would be more beneficial than trying to focus on this capital and regional county stake that they hold. And I think overall that just brings some discipline to the focus that they have as part of the overall stable.
All right. Well, Imitiaz, let us get to your stock pick for today. What are you picking?
Yeah, so I'm going for old staple, steady Eddie ShopRite. They've been a very strong performer, and I think that performance still has room and runway to continue playing out. They've really taken market share from their competitors, but they've also got a strong pipeline in terms of space growth. They've got a number of offerings in their stable. It's not just ShopRite, it's not just Checkers. They've got OK, they've got the pet business, they've got the unique clothing business, and I think there's scope for margins to continue expanding at this rate, and overall earnings growth is still going to be quite positive. So I think they're very well positioned. You're going to see good cash generation. They're reinvesting a lot of that in the business, but again, paying out decent dividends for a shareholder.
All right. Well, thank you so much for your time and for your analysis on what has moved investors' money today, Imitiaz. That was Imitiaz Suliman from Sentio Capital.